right, let's see if we can get some analysis. We'll put our IG Chief Market Strategist, Chris Weston, on the spot here. Chris, we're just getting the NAB numbers through. I don't know if you heard any of that, but certainly talking about that cash profit number being up 9.3% to $5.94 billion. The final dividend, 97 cents a share. And talking about the UK operations improving, or the UK operating conditions improving. What's your thinking? I know that you haven't had a chance to look at this yet.
I think it's against expectations. It's probably slightly better at the margin there, to be honest, Bridie. I mean, cash earnings were pretty much in line, margin if you round it up to 5.94 billion, marginally higher than what the market was looking for. The dividend at 97 cents was 1 cent above where the market was looking for. We were looking for 96 cents. So again, I mean, there's a payout ratio. NAB are certainly rewarding shareholders there. Return on equity, I did glimpse at that just before I came on, at 14.5%. That's considerably lower than where ANZ is, and I think the market was looking for 15%. So a little bit weak on the return on equity side there. And I think that the gross margins that we saw at 2.02, obviously down from 2.11, really goes to show that NAB are extremely competitive, have the most competitive rate out there. In terms of trying to attract borrowing to different lenders there as well. And I think that 2.02 was pretty much in line with where the street were as well. So the market had been expecting some pretty below peer gross margins from that. So I think a little bit disappointing in return on equity. Cash profit, which of course we always look at, was just above the street. Nothing to get really excited about. Gross margins in line. And dividend 1 cent above the market. So again, we've got to be looking at how the stock has performed. The stock's done very well. We know it's up 44% year to date. It's had a really strong gain from those June lows, still well below where we were back in 2007. Has the market priced this in? Well, I mean, it's trading in a pretty much fair value against its longer term historical PE. And the cash earnings are good. They're really good, but they're pretty much in line with where the street have positioned themselves.
Right, okay, because we did see the stock fall yesterday, didn't we? Going against the positive trend amongst the other banks there, down by about 45 cents to $36.23. And as you said, I mean, there has been a big run-up. I just wondered, I mean, what's your thinking on how those banks are going to trade today, given we're also seeing a story too, alongside, of course, the NAB profit numbers, but this story in the AFR about APRA writing to the banks and saying that they need to limit dividend payouts to investors in order to meet the new rules. It's going to require them to hold billions of dollars in capital.
Well, I'm sure the different CEOs amongst the banks will be speaking to APRA very carefully about that one. I mean, at the end of the day, I mean, the story of holding the banks has been an income story, and it has been around the banks going above and beyond expectations with the dividend. We saw that at the last, the last halfly earnings. And that was the thematic we saw there. And again, we saw that with ANZ yesterday, or beginning of the week, on Tuesday, and today with NAB. The payout ratios are increasing, and that's their way of rewarding shareholders and trying to maximise, the share prices at the moment, because the dividend yields are still very, very attractive. Net yields across the board over 5%. So, look, I think, if the market gets a sniff that further down the line, the payout ratios will be much less, then clearly the stocks are going to be a sell today. But I don't see that today, and I think this result is what the market will be looking at much more closely. The question we need to ask ourselves is what's going to create much higher prices in the banks from here. I mean, the conditions, in terms of rates at the moment, are very favourable for the banks. So you can't, and the valuations at the moment are very much in fair value terms against the historical norm. So you can't really get overly excited about the banks, with the exception of the income strategies that these guys have at the moment. And I think any downside will be limited, given the fact that, I think around the 7th of November we do have the dividends, and you can't see people looking to sell out heavily of the banks in the short term ahead of that dividend season.
Yeah. Just in terms, I guess, of Cameron Klein as well, we'll be obviously hearing from him later, and we'll have a live one-on-one interview here on Sky News Business Channel 602, so something for us to look forward to. I guess, obviously, making up such a huge part of the overall index, it was an interesting session, wasn't it, with the Fed statement there, and the moves too. We're hearing a reaction to Fed whisperer, Wall Street Journal reporter John Hilsenrath coming out and saying that sources are telling him that the tapering is on the cards for December. That really seemed to move markets from what we were hearing. What were you seeing?
Yeah, I think there was some really interesting rhetoric. You've got to read through the whole statement and what was said, or perhaps what was not said. I think the initial reaction was that the 10-year Treasury rallied from, or sold off from 247 and moved up to 254. So a 7 basis point move. I mean, the Fed funds futures didn't really react at all. Because I think that, they've got their forward guidance firmly in the market. But, there was a bit of a sell-off in the bond market. There was a little bit of buying coming through. The dollar index rallied about 0.6%. Stocks traded down, the S&P traded down to 1757. Just missed out on a bearish reversal at trend high, so that was going to be a big sell signal for me. I thought that potentially we could have seen the highs in the S&P. We didn't get that confirmation, but for me there was absolutely no concern around the government shutdown. That was a key situation. The other big situation now is that they didn't talk about the future fiscal shutdown. They don't seem overly concerned about what the negotiations we're going to be seeing in January or February. That for me is a big key point as well, because it's been part of the reason why they kept their tapering, or they held off from tapering in September. They talked about the lack of tightening of conditions. They dropped that situation, and it seems that they're really happy now with longer term rates. Again, another big positive for the tapering camp there. So I think the lack of concern around the fiscal situation, it did only remove about 20 basis points from Q4 growth. The lack of concern now that they have around longer term rates, the probability of a December tapering probably increased from around 10% to 20%. The increase, or the probability of a January taper, however, I think has increased markedly on this number. So the consensus had been for a March tapering exercise. There's going to be a lot of strategists out there changing their calls to January, I think, based off this one here as well. So have the highs been put in on the S&P? Perhaps. We didn't get that confirmation last night, but I think the dollar just becomes a little bit more attractive on the back of this note, back of the statement.
Yeah, it's really interesting. So what does that mean for our local market at the open?
Well, we're calling it down 10 at the moment. I mean, it's going to be obviously all eyes on NAB. I think what's going to be really interesting today, Bridie, is what happens in emerging markets. Nowhere has been a more leveraged play on Fed policy than what we've seen in the Indian market, the Indian rupiah, the bond market, and the equity market, which is not a million miles away from an all-time high there. And that's just a really clear way of seeing how markets trade on the back of a tapering, because obviously they benefited nicely from the fact that the consensus has moved to March. So I think that's going to be what I'm going to be looking. Of course, we've got so much to digest over the next 24 hours, which is going to be, markets are going to be positioned for. Of course, we close out the month, we're up 4.1% today. Bank of Japan later on. Europe, we've got their CPI numbers. That's going to be a big number for currency traders, because inflation there is at 1.1%. That's very, very low. And then, of course, you've got ISM manufacturing in the US tonight. We've got Chinese manufacturing today to look forward to at 51.2. So there's a huge amount for traders to be looking forward to and position for as well.
All right. Just in terms of the currency move, as you were mentioning there, I mean, all of those things you're mentioning, will that sort of provide a bit of caution then surrounding the currency markets today?
Well, I think the yen's obviously in play today, given the Bank of Japan. I don't expect to see a huge amount from the bank. I don't expect to see a huge amount from the Bank of Japan really until the new year, I think they'll probably look to expand their asset purchase program just to coincide with the consumption tax rise that we're going to be seeing in April. So there is a possibility we see the Bank of Japan look to downgrade their growth forecast. I think there could be a reaction if we see them downgrade their inflation forecast. That's a possibility as well, but we won't see that until later on in the session, perhaps just after 2 o'clock. The Aussie at the moment is starting to look a little bit vulnerable. I think if we do see a number below 51 on the index for the PMI numbers, that'll throw the camp that we've seen the high now in Chinese growth. I believe we have seen the high now at 7.8%, and we'll start to see it trickle down. Well, I don't think we're going to see a collapse of Chinese growth. And perhaps there's a possibility now that we could start seeing the Aussie dollar coming off. I'm long Euro Aussie at the moment. I think that's the place to be. I think you've got to be long Euro over Aussie at the moment. I think there's some good fundamentals building in Europe. But I think tight ranges today in the currency markets, and just reflection of what's happening.
Chris, yeah, it's going to be an interesting one, isn't it? Thank you so much for that.
Thanks,
Chris
buddy.
Weston there, IG Chief Market Strategist, joining us from Melbourne.